Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for March 5th, 2023. Hope you all are having a great weekend, and we've got a heck of a show in store for you today. It's going to be a big week this next week. We've got a lot to talk about, but before I get into it, I just need to mention, if you haven't checked out Forex Analytics, make sure you do so. It's only $1 for 10 days to try it out. Make sure you download the mobile app as well, and then this way you can be inside of our community. You can get all the push notifications on your Samsung device or your iOS or Google Play, Google device, whatever device you're using. But make sure you're doing that. Check out our community. We have probably one of the most active communities out there. But like I said, it's only $1 for 10 days. Don't cut yourself short. Make sure you check it out. All right. And there's so many tools inside of the Forex Analytics system. So make sure you check them all out. All the analysis, all of the updates. We cover 30 different instruments. We have live squawk feed, news flow, risk management tools, all sorts of stuff. So make sure you check it all out when you get an opportunity. All right, I'm going to jump over to the live charts, and you might notice here I'm actually over in the bond market first, because we can see at the very end of the week, U.S. the longer term really turned lower. We saw yields turn lower, and you can see this 10-year, and I'm going to actually focus in on the 10-year because the 10-year is breaking through an ascending channel. I did a small short video on why this will be influential to the dollar yen, which I'll talk about a little bit here in a second. But what we are seeing across the curve is we're starting to see yields come down, especially on the longer end. You can see here's the 30-year, here's the 10-year. But you start going out towards the shorter end of the curve, like the 2-1 year, and you're not seeing much movement just yet. But keep in mind, it's not just U.S. Take a look at here's Germany. Here is the Eurozone. You can see they're starting to turn as well. So we're starting to see yields really start to firm up a little bit here at the end of the week after having this epic run, which could influence the markets. We have to think about that from a risk standpoint, because if we start to see yields really start to fall, bonds are coming, that means bonds are being bought. Are they being bought because they're of value, or perhaps the market's seeing a little bit of maybe hedging for some risk. So let's start with the S&P, and you can see the S&P really bounced off of a very, very critical level in the market. If you go back to last week's week ahead video, we talked about the importance of the 200-day moving average. We talked about the importance of the previous channel holding. And so I don't know what else to tell you other than the S&P found support exactly where it was supposed to. We bounced off it exactly where we should. And that's going to carry us into early next week. But there's so much happening next week with jobs report on Friday. We have all of, the ISM data already came out earlier this last week, rather. We have ADP jobs report, but also we have the Humphrey Hawkins testimony, or the semi-annual testimony from the Fed chair Powell, and he's going to be meeting with the with U.S. legislators, so both Tuesday and Wednesday. So that is going to be really important for the market. And what I'm fearful most of, and this is one thing that I think about as we go into this next week, hopefully you'll be thinking about too, especially as the S&P rallies to that previous support. We have to be a little careful, because don't forget that I know for seasonality and whatnot, but the data that we got over the last month is still very hot, from an economy standpoint. And if the economy is running hot, that means inflationary pressures are going to be very tough to subside. So what Powell is probably going to be, trying to get across to the American public is that they have to stay, aggressive with rate hikes, and they have to keep rates at these high levels or higher to make sure they put that in the inflation genie back in the bottle, which you all know it's like putting toothpaste back into the toothpaste tube after you already squeezed it out. It's very difficult to do. And the Fed knows this, and they're going to want to, I think they're going to want to continue to express their concerns with an economy that is running pretty hot, with inflation running hot, which is a risk to the economy in the future. So that's probably going to let us know that the Fed's going to have to keep rates higher for longer. And I don't know if the stock market is going to like that. So the reason why I'm talking about all of this is because I think the S&P could be running into some major resistance after we got this very, very healthy bounce last week. And I don't want to dismiss, I guess is the word I'm looking for. Maybe I don't want to disregard. There's the word I'm looking for. Disregard the fact that we had this really nice hammer candle on a weekly chart on the S&P. I think we got to respect that going into the beginning of the week. Going into Monday, you're probably going to see mutual fund Monday, where you see a lot of money being put to work. But as we get towards the Tuesday morning and Wednesday, we have to really pay attention to what Powell is saying. More importantly, the Q&A session and what other legislators are asking, and the words that he uses specifically to let us know about monetary policy, I think is going to be really important. So technically, let's talk about it, just because I know a lot of you are just look at the S&P like I do from a risk perspective. Like I look at the S&P, not trading it so much right now because I still think we have lower levels to go in the future. So I'm not really trying to play the long side of the market so much. And I'm not necessarily playing the short side of the market. I'm using the S&P more of a gauge for risk. How should I be positioning myself with the dollar? How should I be positioning myself with precious metals? That's how I'm using the S&P right now. I do trade S&P, NASDAQ futures. I usually trade, contracts, futures contracts. That's how I do it personally. But it's not really my cup of tea right at this moment in time. But again, I use the S&P more as a barometer of risk. And I feel that the S&P, as we get close to this 4,100, you can see this 618 retracement. I don't even know if we're going to make it all the way up there. But 4092, maybe we might make it up to, maybe we stall at 4060, which is going to be the 50% retracement of this entire move lower. You got this entire move lower, you get a 50% retracement. Maybe that's where we stall early next week ahead of the Humphrey Hawkins testimony. That's been coined that for years, but it's really not really what it's called, right? Anyway, keep that in mind for the S&P. So that's how I'm viewing it. Again, just to reiterate and recap, we bounced where we're supposed to, and by the way, because of that, you guys and gals know right now, we all know very, very clearly where the breakdown point in the S&P is. It is last week's low. Period, end of story. So that means while we're above this, 39.20, we have to respect the fact that stocks are being bought. But if we start getting below that level and we start trading back into this channel, that's going to be a very, very negative event for the market, because then we have a big false upside breakout. That should take us back down to these lows eventually. I'm not saying that's going to happen next week, but you never know. I mean, last month's jobs report was a blowout number. Now, again, I know all the reasons why it was, but that doesn't mean that we couldn't come in with a hot number on Friday, and the stock market might say, wow, after Powell said that the economy is running hot, jobs report came in great, maybe we come in, 250,000 jobs were created, unemployment rate, dips back down to 5%. I don't know, whatever, happens, but the market might not like that. Good data doesn't necessarily translate to good price action in the stock market. It could be very negative price action in the stock market. So keep that in mind. And by the way, the Fed is not the only game in town, and we're going to talk about the other central banks that are meeting this week as well. So make sure you guys are all sticking around for that. So let's before I get into currencies, and I'm kind of doing this backwards from what I normally do, but that's okay. It's all right. It's okay. Got to shake it up a little. Let's take a look at gold. So gold, we're seeing an aggressive bounce back. We had this bear flag pattern. Everybody knew, because we've been talking about this bear flag pattern. We got pretty close to completing. I mean, you look at that, and I always joke, but it's very true. Technical analysis is an approximation, and you get close a lot of times. Like this bear flag pattern, we came close. I mean, we came within, I don't know, $10 of where the bear flag should complete. It's kind of like horseshoes and hand grenades. Close counts. If I throw a hand grenade and it doesn't land on top of you, but it lands close to you, it's going to do the job. And when I'm playing horseshoes, I don't necessarily have to wrap it around the pin to count, right? Same thing. Same with technical analysis. Sometimes you get pretty close and you're like, that was done. That's pretty much done. With that being said, gold is getting a nice recovery. However, it's probably on the heels of this move that we're seeing in yields, and probably on the heels of the move that you're starting to see in the dollar. So gold could continue higher. And what I'm just going to say right now is really big resistance in gold is going to be, well, we're getting close to it. Actually, it's the breakdown point. It's going to be 1860, excuse me. But if you look at all these highs that come in around 1870, roughly, I think that's going to be some pretty stiff resistance. But if we break above that, perhaps gold, perhaps silver makes a nice recovery. You start to see these precious metals recover as well. A couple other things that are happening that I think we should be paying attention to. Bitcoin really came under pressure this week, and this is a good risk barometer. I had this conversation with one of our traders in the Forex analytics community. By the way, if you don't know what our community looks like, this is to kind of give you a good idea of things that are happening in the markets, what we talk about. Staff is in green, and you can see everybody else just chatting. This is just the general chat room, right? So I'm going to put that back. But what I was going to say is, I was talking to one of our traders about Bitcoin, and he'd said, Bitcoin's really broken away from risk, and sort of cryptos, just generally speaking. And I said, yeah, I think they have as well at this point. However, remember, Bitcoin and other cryptos, whether you're talking about Ethereum or maybe some other coins, they have been acquired a lot by Wall Street and institutions really over the last several years. Those are going to be the first things when or if the stock market really comes under pressure. You're going to have a portfolio manager might say, if things start turning over and they have to start liquidating things, they might take a look at Bitcoin and say, I don't know if I really want to own Bitcoin anymore because it really hasn't performed that well, perhaps, or maybe I need to take some profits off the table, but I'd rather keep my position in 3M or, maybe Lockheed Martin, but Bitcoin, maybe not. So what I'm trying to say is if risk or the stock market, you see the S&P start to break down below 39, whoops, I didn't mean to do that. If it starts to break back below 3,900, let's say in the weeks ahead, that is when I think you're going to start to see assets like Bitcoin or some cryptos maybe really come under pressure. So just keep that in mind if you have crypto exposure right now. Just I want you to be thinking about that. Now I'm going to get into the currency market. I'm going to show you kind of what setups I'm looking at this week because, like I said, the Fed or the jobs report and the Humphrey Hawkins testimony is not the only game in town this week. There are other central banks that are meeting as well. But before I get into this, I need to say, if you haven't checked out the trader funding program, make sure you do so. It is a really great way to actually get involved with the Forex analytics community because you are taking an assessment to be able to trade our money. By doing that, you automatically will have inclusion into the Forex analytics community for a period of time based on what assessment you take. Because ultimately, we want you to succeed. So therefore, we want you to be inside of our community, getting ideas, being able to ask questions. If you're in a position and you're like, I'm not really comfortable with this position, there's a support system behind you. That's the most important thing when you're trading the markets, is having a community behind you. So it doesn't matter if you're trying to access $25,000 of our money or you're trying to access $1 million of our money. You'll have access to Forex analytics for a period of time. So make sure you take advantage of that with the trader funding program. Also, if you subscribe to our newsletter, You will also be able to watch the video of how I passed the assessment. I failed an assessment as well, but I'm going to tell you how I passed it and the things that I did, which doesn't make it the right way. It's just, the way that I did it. I have a different approach in the market than perhaps you do, but I have personally passed an assessment, so I know what it's like going through the process. And I did that at the end of this last year. So make sure you check all that out. Let's get back into the analysis. So let's start off with the euro. The euro, we have not made lower lows. So I have to respect the fact, and let me get rid of the stuff from last week, some of these lines. And matter of fact, I'm just going to extend this one out. The euro, let's acknowledge that we haven't made lower lows and we're holding the 88% retracement. That's a good thing. If you're a euro bull, that's overall a good thing, because the last thing you want to see is, you don't want to see this level break. And the reason why you don't want to see this level break, the support, is because then we're starting to make, A, we're making lower highs, B, we'd be making lower lows. The flip side to what I just said is you have to take into account, let me remove this stuff. You have to take into account that we have had a very shallow bounce in the euro. So I'm not convinced that the euro is going back up at this time. I'm really not. I need to be convinced of that, which would mean that we have to break back above, 107, or really back above 108 before I start feeling comfortable that the euro is starting to trend higher. Right now, the bounces have been shallow, so there's nothing stopping strong data, hawkish Fed Chairman Powell this week. There's nothing stopping the euro from absolutely breaking into new lows, meaning breaking back below 105. Keep that in mind as we go into this week. I'm not confident. I should say 100%. I'm never 100% in the market, nor is anybody else. But I'm not super confident that the data is going to continue to be strong going into the end of next week for the jobs report. But I'm not going to bet against the U.S. economy at this point, because personally, I still feel that the U.S. economy has some juice left in it. But I think we're getting close. Therefore, if the number comes in strong, and if Fed Chair Powell is hawkish, there's a good chance that the euro could, sever through these lows and start trading back below 105, and then that's going to put the euro on a tailspin move, probably back down towards the 200-day moving average, which comes in right around 103. And I think ultimately that's where I'd be looking for some pretty key support for the euro in the event that we broke down. I'm coming to you guys and gals a little wishy-washy like I was last week. I'm kind of not 100% sure, but I'm definitely on guard. You know what I'm on guard for? And let me get rid of all this stuff that I drew here for you. What else I'm ready for is I'm ready for the cable to really start getting its trend on. So we are still monitoring this double top, but what's more important at this point for me is this wedge that is developing. And if you listen to us live every day, myself, the rest of the Forex Analytics team. By the way, if you don't know how you can do that, you can go right to forexanalytics.com. Go down below the link to this description. You'll see a link to the video, or the F.A.C.E show, excuse me. But you can get to the Flow show, which is our free European show that Ryan Littlestone, Stelios Kontigoulis, and usually K-Man is there. I'm sleeping, but they're keeping you up to date on what's happening and what's moving in the European hours. Then the F.A.C.E show is our free show that we do every single day. And we have our great host, Dale Pinkert, who brings in some wonderful people to interview. So make sure you check those out. Anyway, if you've been following the F.A.C.E show, then you know that I'm really following the sterling or the cable really at this bearish wedge. So, we get above the wedge resistance. And by the way, we have UK GDP on Friday. So that's going to be the data that's going to matter. But I think this is going to end up being more of a dollar story this week. We get above 120.75, 120.50, then we're going to, make our way back into this range. But if we break down below 119, we have a big double top developing, and that's something that you have to be paying very close attention to. What else is happening this week? On Monday, we have the RBA. Monday night, Tuesday morning if you're in Australia. We have the RBA. They are expected to raise rates. But remember, this is one of the central banks that was a little bit less hawkish last meeting. But with China reopening, with the bounce we've kind of seen in copper, we're seeing U.S. economy continue to be strong. Will they change their tune? That's to be seen. But I will say that the Australian dollar still has a big head and shoulder pattern that you all know about for the last couple of weeks. And all we're doing is we're just doing a little bit of a consolidation, right now. So as long as we stay below 68, you can call that 68.50, 68.60. As long as we stay below there, the risk is we still move back down below 66 cents. Now, before I go in the last couple of things that I wanted to cover, I just want to say, if you're enjoying this and you enjoy these videos, make sure you give myself, the team, a big thumbs up. It's free to actually just go down on the video, click the little thumb, it says thumbs up. It helps. Jumping in our comment section, that helps the algorithm too. Subscribing to our channel, that's free to do. And all those things are free to do. So it really helps out what we're doing here. So if you like what these videos over the weekends, you like what our team does putting this together for you, make sure you give us some love. Thank you very much. All right, continue on with the last couple things I wanted to cover. So again, we have the RBA this week. We also have, and this is something that I've been watching really carefully. I actually just started acquiring a position on Friday. It's a little bit risky here, but we have Mexican inflation this week, and the dollar mex has been really under pressure. You guys know this is like going into last year. This is like one of my favorite trades, and it still is. By the way, I think the Mexican peso strength is something that we need to pay very close attention to, and I think it will continue over time. However, I think we're very oversold. The daily sentiment readings are extremely extreme, so I think that we will have a counter trend move developing very soon. So keep that in mind. I think the dollar Mexican peso could actually turn around and rally a little bit after this week. Now we have to get past a lot of US data this week, but we have Mexican inflation Thursday morning, and that's something else to keep in mind. And speaking of inflation, if you guys trade the US dollar Norwegian krona, we have Norway's inflation on Friday. Now, the last thing I wanted to talk about is I want to talk about the dollar yen. We have been, I think I've been very vocal the last couple of weeks about how I'm looking for a short in the dollar yen at the 38% retracement, 200-day moving average. I can list out all the reasons, but one of the reasons, and I just want to make sure that you all know this, and I still feel this way, is that I feel that the UEDA, the new BOJ incoming governor, he's going to say whatever he wants to say to get the job. But once he's there, he's probably going to be less monetary policy eccentric than BOJ Kuroda has been since 2013, 2012, whenever Kuroda took his seat. Therefore, I think that we will see probably this year the US dollar Mexican peso, or the US dollar Mexican peso, the yen continue to strengthen this year, and we should probably revisit these lows, if not go lower, before eventually turning higher again. So it's something that I'm looking for. You all know that I'm playing the 38% retracement. I'm playing the 200-day moving average, and the move lower in yields. Just so you all know, let's go over to a 4-hour chart. Let's do it this way. Actually, let me take you back over to the bond market, and let's go to the 10-year, and I'll just give you guys what I put out on the YouTube short on Friday. You can see this very strong relationship between the 10-year yield and then the US dollar Japanese yen. So if the 10-year yield is starting to drop and we're starting to break down, and at least we're going to start to, you're going to see bonds recover a little bit, chances are the dollar Mexican peso, the dollar yen will probably pull back. However, now, before you're like, okay, Blake, I seen that, so I'll see you later. I'll see you next week. We have the last BOJ meeting with Kuroda on Friday morning. Thursday night, if you're in North America, Friday morning, the 10th, So keep that in mind. That could be a mover. Now remember, yen or Japanese data is being scrutinized and watched very carefully by the market nowadays. So that's going to be something that that we all will be paying attention to. So with that being said, I want to thank you for spending an extra amount of time with me this week. I know this is kind of a long video, but I hope you all have a great remainder of your weekend. I want to thank you so much for spending your very valuable time with me, and I will see you on Monday morning on the F.A.C.E show. Have a great day. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.